What if a country launched an economic war thinking it had all the leverage, only to find out it handed its rival the upper hand? Back in 2018, Donald Trump famously tweeted, "When a country, the United States, is losing many billions of dollars on trade with virtually every country it does business with, trade wars are good and easy to win." Fast forward to today, and the Trump administration has escalated that belief into action, imposing tariffs over 145% on Chinese imports, and igniting a far more dangerous trade war than before. And according to U.S. Treasury Secretary Scott Bessent, there's no real risk. "I think it was a big mistake, this Chinese escalation, because they're playing with a pair of twos. What do we lose by the Chinese raising tariffs on us? We export 1/5 to them of what they export to us, so that is a losing hand for them." In simple terms, the Trump administration believes it holds escalation dominance. That is, the ability to control and win any back and forth in this economic conflict. By this logic, any country that retaliates against U.S. tariffs, whether it's China or Canada, is just walking into a trap they can't win. But there's a problem. That logic might be dangerously flawed. In fact, it's China, not the United States, that may hold real escalation dominance in this trade war. Why? Because the U.S. depends heavily on imports from China, goods that can't be quickly or cheaply replaced. Starting a trade war before securing reliable alternatives could mean walking straight into an economic defeat. Even using Bessent's poker analogy, it might be Washington, not Beijing, that's betting everything on a weak hand. And this assumption of superiority is flawed in two major ways. First, trade wars always hurt both sides. Both countries lose access to goods, services, and markets they rely on. Like a military conflict, trade wars bring damage to both aggressors and defenders. If the defending country couldn't fight back in a way that hurts the aggressor, they wouldn't retaliate at all. The fact that they do means they can inflict pain. Second, Bessent's poker comparison doesn't hold up. Poker is a zero-sum game. You only win what the other person loses. But trade? Trade is a positive-sum game. When one country benefits, the other usually does too. You put money on the table, and you immediately get value in return, in the form of goods and services you want or need. But the Trump administration claims that having a trade deficit makes the U.S. less vulnerable in a trade war. Because America imports more from China than it exports, it supposedly has less to lose. That's just not true, neither in theory nor in practice. In reality, blocking trade reduces a country's real income and spending power. Countries export so they can earn money, to buy goods they don't produce themselves, or that are too expensive to make domestically. And even if we focus only on the trade deficit, like the Trump administration insists, the numbers don't favor the U.S. In 2024, U.S. exports to China totaled $199.2 billion. Imports, $462.5 billion. That's a $263.3 billion trade deficit. If you're measuring power by trade balance, it's actually China that has the upper hand. As the surplus country, China earns income from exports. It can use that income to invest elsewhere, stimulate its own economy, or shift goods to other markets. The U.S., on the other hand, faces a different challenge. As a deficit country, the U.S. gives up access to key goods, goods that either don't exist domestically or are far too costly to produce. And when tariffs are imposed, these goods become even more expensive. Worse still, they're not easily replaced. That means the pain of a trade war hits specific industries, regions, and households, often hard and fast. Add to that another layer of vulnerability. The U.S. is a capital importer. It relies on foreign investment, but unpredictable actions, like massive new tariffs that disrupt supply chains, make investors nervous. The result? Falling investment and rising interest rates on U.S. debt. So, what happens if this trade war drags on? The damage to the U.S. economy could be severe. And with tariffs over 100% already in place, we're not talking about a distant possibility. We're already in a full-scale trade war. And the more the US escalates, the more its own economy will suffer, likely even more than China's. Why? Because if the US doesn't invest now in strengthening its domestic industries or finding alternative import sources, it could soon face shortages in vital goods. We're talking about basic components for medicines, affordable semiconductors for cars and appliances, and even essential minerals used in defense manufacturing. If imports from China were suddenly slashed or halted, the result would be economic stagflation, a situation where inflation rises while the economy slows down. It's the same nightmare seen in the 1970s and again during the COVID-19 pandemic. And in that scenario, the Federal Reserve would have no good options. Any move to fight inflation would raise unemployment, and any move to create jobs would increase inflation. In essence, by picking this fight without first securing its position, the US is throwing stones from a glass house, and doing so could be economically suicidal. Trump's aggressive trade policies risk inflicting the exact damage they were supposedly designed to prevent. Now, maybe, just maybe, this is all part of a grand negotiation strategy. A high-stakes bargaining tactic meant to squeeze better terms from China. But even then, the damage may outweigh any potential gain. Core problem? For Trump's threats to be taken seriously, they have to hurt the US economy enough to look credible. But that creates a new issue: constant instability. US businesses, households, and foreign investors all begin expecting economic turbulence, and with that uncertainty, they pull back. Investment drops. Trust in government policy erodes. And the result? America's own productive capacity declines, giving China and others even more leverage. What we're watching unfold might not just be a trade war. It's starting to look more like a modern-day Vietnam War. An avoidable conflict that turns into a long, costly quagmire. And like Vietnam, it risks undermining confidence in America's leadership, both at home and around the world. With that said, thanks for watching, and until next time.